The following is an excerpt from an askSlim premium level video. Follow us on YouTube, give us a thumbs up if you like this video, and do subscribe to this channel on YouTube. Share it. There's tons that come out every single week. Follow us on Twitter at askSlim, and write to Matt at askSlim.com for trial memberships. We have trial memberships available for all of our levels, 1, 2, 3, and 4. And go to the askSlim.com website for details. Thank you, and enjoy the video. All right, so this is going to be a little bit different, the way we're going to look at the Treasury market today. I kind of picked this one out so that I could do a little more extensive analysis because the Treasury market is very weak today. And it took a while, in fact, almost a frustratingly long while, because I made it known that I believed that the bond market was going to go down, interest rates up, and I was maintaining a position in line with that analysis. Finally, we get this movement today. There's a few things that are affecting the Treasury market today. It's almost what seems like a perfect storm. First of all, the Fed announced just a few days ago that they intend to borrow $3 trillion in the near term. And that's not going to be the end of it, because our economies are not turning around on a dime here, and that means they're going to have more programs and borrow more money. And you have all of this crowding out of the corporate sector. Of course, they're trying to prevent the crowding out by buying up corporate bonds and maybe even buying ETFs, all of these things which I deem as illegal, but I'm not an attorney. But I have read enough about the markets to know that the Fed was formed in a way that they're not supposed to be buying anything that creates taxpayer risk. And that means that it's basically government agency things, but they've created these shell companies that allow them to operate, to guarantee what's in the shell company, and then they can then buy corporates. They can buy things way outside of the realm of what they were designed to do, and they have to keep borrowing money to do that. So they're gonna keep doing that. $3 trillion right now. That's the Fed. Then there is hope for the reopening of the economy and for the disastrous numbers we're going to see in the second and third quarter this year to improve after that. So the investors are looking beyond that. And then there's this other one, which Jeremy Siegel, who when the Dow was 1,500 or so, 15,000, he came out and said Dow 18,000. I laughed at him. I thought, wow, Dow 18,000, you've got to be out of your mind. Of course, he proved to be right, and then, of course, the Dow soared to levels, 5,000 points, 8,000, 7,000 points beyond that. So I'm not going to criticize him right now, but he came out and said the bond bull market is over. Of course, I said that a couple months ago. But I'm going to give him credit for influencing the market somewhat right now. So perfect storm between the Fed and hope for the economy reopening and crowding out of corporate sector, and Jerry Siegel coming out and saying that the bond market is done for. All of that is affecting the bond market in a very negative way. So let's take a look here as we switch over into the charts that I share with our level 4 members. And just so you could get a little clue, this is what they actually see when they get my charts. That looks like a mess, right? So when I expand it, and there are 16 charts on this grid, here is the ZNs. I'm actually going to go back right now, and I'm going to start out by looking at the cyclical chart on yields. And you can see in here that yields way up over here at 3.24 on the 10-year yield went into this downward trend. And these dotted lines right over here are what's following the cycle harmonics that you can see in there. It's pretty clear when you look at that. And we got this big, decline to just under 0.4. It was like 39 basis points right over here. And then it jumped up very quickly. I'm just going to give you this, as there was a panic back over here in the markets, and then jumped way up over here to 1.26%. So 39 basis points up to 1.2627% right over there. And that kind of set up that bottom. And we didn't believe that interest rates were going to go back down over there. We thought it would come back up here. We have a target of about 1% here in the bond market, a yield of about 1%. That's actually a little bit of a downgrade because we were looking up here at about 1.2. So the way that probably forms is the bond market comes down in here, that makes yields go up, maybe the bond market wiggles again, and then you get another pop up here. And this is all a period right over here, and this is a 5-year weekly chart that we're looking at, that we think the bond market's got a lot of problems out over here, and that's why we've been negative on it. So 2 points down in the 30-year today, and the weakest is that we're looking at are the 20 years, and I'll show you that in the TNX. So all of this says to us yields are going up. I mean, that's just the bottom line of what we saw in here, and there they come. Here is the cyclical patterns on the daily chart in yields. Of course, this is inverse to the 10-year. And look at the beauty in there. I mean, it's beautiful patterns, and you could trade bonds right off of this. And we made the low right here, and the bond yields now going up. And we're either going to see 1% probably here, or it doesn't quite make it, and then we see it somewhere out over here in the next rising phase. So yields to us look like they are going up. That's the key thing that we're looking at. So what's a little different in here now is that we are looking at a momentum chart in yields. So this is a daily chart, momentum in yields, and I want you to see right over here is in January where the yields turned into a negative yield. There was a lot of chop in momentum in here, and it turned negative here, and then continued to come down. And there was inertia. Where do you see inertia? Well, you see it in the expansion in here of the slim ribbon. That tells you there's inertia. And you get the projection oscillator right over here gives you a sell right there. Very weak indications right over here. Sell, sell, sell. All of those. And look what happened right now. For the first time since January, momentum is neutral in interest rates. So that shows you the change that's going on when we look at that. Now we'll take a look right over here, and you could see our intraday 2-hour charts with the slim ribbon on there also. There's a daily high-low indicator on here, and when the momentum turns positive and you move up through the daily high-low, you get an indication of a positive trading bias. Through here, you were all negative trading bias. On yields, there's a sign of strength right in here. askSlim market condition indicator is still giving you negative readings, so that will not much help. But what we show in here is a positive trading bias for yields, so that would be the inverse of that would be a negative trading bias for the Treasuries. So now we're going to move over into the Treasuries, and here's the 10 years. We were looking for this peak to be the peak. This was agonizing as it moved up here for about a month and a half and tried to test these levels over here, but now you could see it's rolling over. We're looking for a few weeks decline in here down to about 136, potentially down here as low as 135. So very risky period that we're looking at in a brief window that we see in here for decline at the moment. Here you can see the same thing on the daily chart, and there on the bottom right over here is the option bias indicator. It's one of our proprietary indicators, and you can see in here it's been positive for this whole time period. Slightly overbought, and we got a little bit of a top warning right there, which proved to be correct, and then again turned positive through all of here. So it was driving us a little bit crazy, but telling truth. And now you can see the yellow dots as right over here as that the market askSlim option bias indicator that you can see as it's lit up right there is now giving neutral readings, so that there is a change in there. I wonder if that's going to go to negative soon. Here is the daily momentum, still positive, has not turned negative yet, but it's pretty close to doing so. The projection oscillator giving a weak reading right over there, and we think that that is about to give up its positive momentum. And now that we look here at the 2-hour chart, this is now giving a signal of a negative trading bias. That means that you trade this on the short side if you're an aggressive trader. Let's switch over to the 20 years. We continue with this analysis, and you can see in here, very similar to what we saw. Now see the momentum downturn right over here? We get that right here. This projects to coming down to around 157. It's a pretty good short side trade in here, especially if you're trading the TLT puts. They're very responsive, and this looks like a period in here of a little bit longer. Here's your the 10 years right over here, bottom sooner than this does here. So we're likely to see some declines further out into June based on what I see here in these patterns. Here is your pattern in here, and you can see pointing on the daily chart, target zone here, 159, reasonable 155, that level right there. That's what we expect. You'll note in here all of this positive readings except for some slight top warnings at the exact same right spot. Now this positive option bias study now has turned neutral in here, and I kind of think it's going to turn negative. Also, we'll look here at the TLT on the daily chart, and you can see momentum has now turned neutral. First time since this reading over here, way back over here in March. So these buy signals that you were getting right in here, buy right over here, you will not get them anymore when they're in the neutral category. Here you could see right over here, green, buy signal right over here. That was really good. So this projection oscillator and the slim ribbon give you great signals. Right now it has now turned neutral, showing you the weakness that's coming in here, and this is really good. You can see that the this was a long short-term positive bias right over here that we had, and buy signals, buy signals, buy signals, all of them right in here. Here's where your momentum goes negative. Here's where it confirms on the daily high-low indicator, and here you get sell signal, a weakness signal right over here as it continues to move down. So great signals coming out of the intraday 2-hour when you look at the combination. And now when you look at the bottom here, the askSlim market condition indicator, it has now given up what was a positive condition all through over here, and is now testing the swing zone. You want to learn what that means? Go watch our video on that on the website. So it's now given up a lot of strength when we look at this. That is the TLTs, or the 20 years. Let's switch over to the 30-year. Guess what? Momentum on the weekly now is turned down. Our target right over here, 173, a potential down over here to 169. This window of time, at least a month on the downside when I look at this. Some nesting that you see right over there with the 10-year, and this is a pretty strong declining phase that we see in here. Here you could see the cyclical patterns, how they line up. This points to about another week, and then maybe another whole cycle out over there to the downside. Kind of uptrend line right over here that we're looking at. That takes you to maybe 176. We'll see if it breaks down below that and gives you some forced selling underneath those levels. So this again looks like a pretty negative condition. Again, this positive condition of momentum, which began right over here way back in January, mid-January, gives you positive signal, positive signal, positive signal, and now has turned neutral for the first time. So a lot of things giving us indications of some weakness, short-term trading bias, a sell right over there. As that changed, when it was positive, it was buys, and you can see it going up right in here, and now the momentum has given way to negative and negative trading conditions that we see right over here. You do not want to trade long side when you get this type of a setup. So that is a look at the bond market. Showed you this Treasury market, I think, very significantly in a different way. I hope that looking at the depth of it was valuable to you. Overall, it's been telling us that the market was going to go down, but it was very reluctant to get the move going. And now that it is going, it's got some momentum behind it, and we're looking for lower prices still in the bond market. And I hope that you enjoyed that little different look here in our FutureSpeak show.